All right. Good morning, everybody. Hope you have yourselves a fantastic start to the AM here. Happy Wednesday. And yeah, hope everyone's doing well, feeling refreshed, recharged, and ready to go. Um, Bit of a frustrating, I would say, run of trading form here for the last little bit, right? Um, every day has been start in the red or starting in the near red, go quite red, and then make it all back. And that's been a wildly frustrating, right? Period of trading. I think everyone um, feels the same about that, right? I don't think that there's any uh, residual good feelings or anything along those lines, right? About dealing with these sort of choppy conditions and these challenging markets, and yeah, seeing things kind of drift and fade, and we'll call it like seeing some of the discipline disintegrate, right, a little bit with these markets. And so, what I'm deciding to do or have decided to do is to do a little bit of like a dopamine detox here, and to get back into focusing on honestly what I think is what makes me a good trader, right? So the way that I'm going to do that here is I've kind of created myself like a little bit of a challenge, right? If you want to call it that. Put myself back in a situation where I am just really focused on like process based things, not PNL based things, and yeah, trying to get kind of the consistency back to where it needs to be. The it's been a weird it has been a weird few weeks worth of trading because PNL has been good. I just think that the process has been a little bit shit, and wanting to really focus back in, right, and um, sharpen up basically the process based decisions so that I'm not giving this away, right, when things kind of get back to being normal again, right, or a relative variant of normal. So my objective, right, with this detox is to get back to quote unquote consistent trading and to improve my morning win rate and consistency. So the objective, right, then is to stop relying on big late day or late morning wins that make me my money or make my day. The benefit of that, right, would be to protect my mental capital more often and avoid situations where I am breaking my rules. If I'm looking at my trading journal here, I've had, call it 4 days, 5 days, right, where I've probably broken a rule here, trading this year. And three of those opportunities, right, or three of those days have happened from May 23rd onward. So I think a pretty obvious discussion, right, that yeah, probably not following my rules as well as I can. And the comments people made yesterday, right, of that being probably more gambling than trading, thing that I took to heart, and obviously not my intention. Now um there's a few things that I want to focus on here a little bit today. We'll talk about some of the other stuff later on. Um, but yeah, there's a few little things. So, like I mentioned, I'm going to be trading micros here for the next little bit. Dopamine detox, and the objective of that, right, is to basically make it so that my P&L is not relevant and I can focus on technical decisions right behind my trades. So cutting losers earlier, right? So if things aren't behaving the way that I want, or I go green to red, I don't give back those decisions. The other element, right, is that I want to get almost like back into being like a factory trader. And what I mean by that is just doing like boring, repetitive executions on a daily basis instead of basically, trading until I'm green. And then, I think that getting back to being very focused from a technical perspective should mean I can trade less, but with higher quality setups and kind of get back to having more sort of easy green days. A few rules I'm going to have for myself here. So I'm going to be trading micro. So it's going to be MES, MNQ, MCL. I think that's what it is. And I'm going to be setting my max daily loss to be $750. So about half of 1% here of my base account. So yeah, going to be kind of managing that here individually. And then I guess third rule, right? Obviously no averaging down, no mental stop losses, none of those types of things. And then you still have the opportunity to pyramid, but with hard stop losses, protecting a 1R win. So if I get stopped out, right, I'm risking $200. If I'm going to be pyramiding into a position, I need to be protecting a $200 win. And so that's the objective, right? So I've got those 4 base goals, I'm calling them like rules of engagement. And the idea here, right, is that I'm going to be willing to go back to trading minis when I accomplish, right, these 3 things. So win rate on the first trade of the day, right? Want that to stabilize to be above average. So 60 to 70%, right? In that sort of win rate percentage. I want to stack up 5 consecutive trading days where all my rules were followed. So that doesn't mean 5 green trading days. That means 5 trading days where I traded the micros. I kept my max loss right on the day to be under $750, where I didn't average down. That's not an issue that I necessarily have. But where I didn't average down or didn't use mental stop losses, and then where I pyramided, right? But if I did pyramid, I was protecting 1R. If I do all 4 of those things on 5 consecutive trading days or days that I place a trade, then yeah, going to be pretty happy, right? To go back to increasing my position sizing, and then go from there. And then I've created like a refined journal or like a trade recap thing. I can share that with you all later this afternoon. But the idea here is that it's going to be a little bit more of a specific trading journal that's hopefully going to help me highlight, right, maybe some of my psychological downfalls that I've been feeling here recently. And so focusing that. So with those call it like rules of engagement set up here, there's a refinement, right, that's coming from it. So I'm going to be if I'm looking at my trades and speaking to some of you there yesterday, I think that probably I've been too aggressive with some of the setups that I'm willing to trade, i.e. I'm willing to trade reversals away from ranges too aggressively. I'm willing to play breakouts too aggressively. I'm looking to play breakouts in the middle of price structure too aggressively. And it's just kind of getting stuck, right, in moves that aren't willing to give us any follow through. So I'm limiting the setups that I'm going to be trading here to 2 specific setups. So I'm going to be trading the opening range breakout, right, which is a breakout from inside the opening range, right, kind of our bread and butter. And I'll be willing to trade that on the 3, the 5, the 10, the 15, and the 30. And then be willing to trade a breakout over or under the high or low of day. So if we have like conditions like we had there yesterday, right, where it was like a really fakey outy, choppy, whatever you want to call it, market, I would then be willing to look for a breakout right through these highs or a breakdown here through these lows. Doesn't necessarily just have to be the breakout from inside the opening range. And then just making sure the confirmation standard here is just very consistent and precise, right? So increasing and outlier volume on all confirmation candles, and then a full body bullish or bearish, second most bullish or bearish, or normal body bullish or bearish candle close on a confirmation standard. Sorry. So that would mean, right, that a candle like this, not confirmation, would mean that something like this, right, not confirmation, would mean something like this is confirmation. And then if those like base resets, right, back to the fundamentals, whatever you want to call it, right, continues to show us a variety of the same sort of sample size we've had here over the last couple weeks. I have a few test ideas that I will work through here and then implement those. So it's kind of like 4 core ideas I have here right now. They're not going to be implemented here yet today, but can look to apply that filter, especially if that opening trade continues to be elusive, probably the right way of describing it. So first variant of that, right, would this be to avoid fake out scenarios, or as many fake out scenarios, but it would be about changing the stop loss location to be high of day or low of day, and then potentially looking for like a multi-candle pullback right into that area. So that would be like a more aggressive version of the pullback entry technique, where it could make a higher high, right, and then pull back towards our zone, or it could make a lower low and still pull back to our entry zone, i.e., being able to stomach a little bit of a deeper pullback right on those opportunities. Could be something that we work towards if we still keep getting faked out. The other alternative here, right, would be to use VWAP as like a base filter. You could also use like a moving average here, but VWAP would be probably easier, and it would just be going long on breakouts through VWAP, right? So if you're above, short if you're below, and basically then just not fighting that. And then the other 2 tasks are more, I would call them superficial, but the other element that I think I've probably been a bit frustrated with is I've had multiple trades, especially multiple early trades, go from green PNL to red PNL. So just thinking about or playing around, right, with hard stop losses, protecting wins once I'm up X amount, and just again, right, resetting and then going from there. Obviously, the objective, right, with hard stop losses is not to allow yourself to get stopped out on that hard stop. It's to close your trade before it pulls back towards your entry price. But if I need to protect myself from myself, so be it. Happy to kind of be humble there and take that. And then the final ingredient here, and this is maybe a little bit more of a longer term solution, is to basically screen all the other tradable names inside our futures universe. Maybe not all of them, but put together a list of like 10 to 15, and you can kind of cycle through, pick the names that are giving you kind of hot cyclical moves, and then look to focus them if indexes continue to maintain their range bound conditions. So if we are stuck, or we're going to continue to be stuck in a range bound market, then look for other opportunities, right, that are giving us like, textbook pattern breakouts from longer term structures. So stuff like big wedges or bull flags, or ascending wedges or descending wedges, even channel breakouts, right, things along those lines, to see if we could find maybe some more momentum. Again, I want to stress, right, a couple things from a trading perspective. When you are inside the room, no one here is forcing you to place any trades. No one is got a gun to your head saying you got to do this, you got to do that, or you have to do X, Y, Z. So it's important for everyone to realize that you are making those decisions, right? You are yeah, deciding to take those trades as well. As much as it is me taking these trades, don't have to take every single trade that I take, right? You can paper trade, you can practice, you can learn, you can take every trade that you want, but there's no crying in the casino, right? Everyone here is an adult. Everyone here is responsible for their own decisions, and I don't want it to feel as if the only chance that you have of making money is if I have a fantastically easy trading day and your bad habits are able to be overcome basically by the quality, right, of my trading. I also don't want it, right, where I have a really good trading day and you get your ass kicked and you aren't successful. And that's why I am ultimately implementing a lot of these processes here this morning, and why I'm taking this so seriously. But I also want people to view this as, well, if Michael thinks he needs to do this, like maybe I think I need to do this as well, or I need to think about my trading a little bit differently, or I need to be more accountable to myself over my decisions. Um, this desire um, to blame me for your success or to credit me for your success is not something that I want to be a part of. That's too much of a emotional roller coaster to have to deal with that. Um, and it makes things very difficult and very challenging, right? To be able to execute um, and to kind of like be able to play the numbers game where no matter what I try or what I do, um, you're still going to lose money, right? I don't want that to be the sensation. I don't want that to be the reality here for people inside the room. I want them to understand why I'm making decisions, to see me walk through why I'm making decisions, and to be able to take those techniques, learn them, apply them to their trading, and then to make it their own ultimately. And the way that you make it your own, right, is you put in the work outside of market hours, right? So you test your trades, you back test, you go through your journal, you ask yourself, what can you improve, what can you change, and you don't just wait, right, for someone else to fix it for you, because no one else is coming, right? We are all in control here of the element of success that we are going to accomplish. And when we give that up and pass that on to someone else or something else or some other um I don't know, some other variable, um we're not giving ourselves an honest chance, right, to get better or to improve. So obviously, right, if I'm an educator and I'm in the stream here, I'm not doing a good job if there's a divergence between my results and your results, right? That is fine. Um, but you are also responsible for your own trading decisions, and I think I do a really good job here of holding your hand, of giving you information, of showing you how I work, and kind of the thought process I put behind things. Um, if you want to be successful, it is ultimately copying those things that's going to make you more money long term than skipping steps and just saying, hey, fuck it, I'm going to go all in on this trade. And if it works out, awesome. If it doesn't, I'm going to call Michael a gambler, or I'm going to blame DTR, or I'm going to blame market makers, or I'm going to do whatever. Um, not willing to tolerate that. I'm not willing to put up with that. I don't believe that is what makes people successful. And yeah, I'm going to be very staunch in my defense of that. Um, So yeah, that being said, right, those are kind of my I'll call it my rules of engagement here for the next few days. Um, not much is going to change besides that. Um, and yeah, just figured I'd share that with you all or what my process is. But to also mention, right, that some of the feedback there yesterday was completely unacceptable. Um, I'm not going to be called some of those things. I won't be treated like that. I work too hard. I put too much energy into this. I put too much effort and time into speaking with you all on an individual basis. And yeah, I'm not going to tolerate abuse from people who aren't doing the work. So that's my comments here for the day. And yeah, let's get after it. So first things first here on ES, right? We've obviously got increasing volume. We've got strong-ish candle shape, right? And then we have a decent-ish gap up this morning. So we're looking for a 3 for 3 here to the upside, and we're looking for a continuation narrative, right? No downside case with the 3 for 3. And so we're looking, right, for that upside scenario. Target here to the upside is going to be 60.80 as our first level. And then we're going to push up towards like 61.50. Again, I wouldn't expect this, 61.50. I wouldn't expect us to get that total follow through here this morning. But let's go from there. All right. NQ, similar thing, right? Maybe not as pronounced of a breakout here yet, right? We're still kind of testing the upper end of the pattern, but it is still a 3 for 3 here to the upside. And we're going to be looking for a move towards 22.1. And then we're going towards all-time highs. All right, CL, red candle, increasing volume, gap up. So two ways that we can invalidate that gap up, right? We break out and hold above those previous highs. So above, we'll call it 66.50. So a breakout above 66.50, we could look for this trend continuation breakout, right, that we have from this wedge. Or alternatively, right, this could be a mean reversion opportunity, right, or a breakdown opportunity down towards sort of 64.50. All right, sweet. Apple inside bar. Microsoft, week 2 out of 3 without volume. Tesla, 3 for 3 here. Amazon inside bar. Nvidia, fake out, lower low, gapping up. So we'll call this a 2 out of 3 to the upside without volume. AMD, right? Same thing, 2 out of 3 to the upside without volume. Meta, same thing, 2 out of 3 to the upside without volume. Netflix, 3 for 3 here to the downside, maybe looking like a capitulation move. Okay, and then Google, textbook, little 3 for 3 here to the upside. All right, sweet. So that's our analysis here this morning. Uh, yeah, trending markets here to the upside, possibly a news narrative, right, supporting that with go from there. And hopefully, right, we can find a little bit of enthusiasm. So, Mark, you have a question here. Yesterday, we saw a massive mover late morning. Didn't find any specific headlines or slash event. In your experience, can you address when slash how or what those types of moves and how to handle them? So, yesterday's big sell off was on uh, the anticipation, right, of comments about the China trade deal. So it gave a big algo dump before that. Once Besant talked about progress there, then the market absolutely ripped higher. Um, in reality, I don't have an edge trading news. Like I'm never going to be the first person to see the headline. So if the headline's out, it's probably already too late for me to jump in and take that trade. So it's more philosophically of the belief that news comes out in the path of least direction, right, or support the path of least direction, sorry, of least resistance, and it moves in the path of easiest direction. And so sometimes, right, if there's a choppy backdrop or whatever, then you can get that big fake out low or big move higher, kind of like we saw there yesterday. Again, it's kind of one of those things. Hard stop losses are going to be your friend there, and you can bail yourself out using those techniques. Yeah, so I mean, I don't place trades a minute before or a minute after. But right now, with a lot of these tariffs and things along those lines, you're getting headlines randomly or like in the middle of the day. Um, so you never know. All right. Any questions here, team? All right. I'll take that as a no. All right. So market open here. Let's see how the day shapes up, where that momentum creeps in. And then let's go from there. In the meantime, I'm going to go make myself a quick cup of coffee, spend a minute or two here visualizing a successful trading day. And then I'll jump back on in a few minutes. All right. So far, nothing interesting happening at market open. Our high of day and our opening range are at the same spot, right? So not much needs to change from that perspective. Maybe we're going to have an early opportunity here in crude. But yeah, let's see how it goes. And I will simply be using uh MES, right? MNQ, right? The various tickers that we focus on here on a daily basis. I'm going to be doing all my analysis still on ES, NQ, CL, using those volume profiles, using all those things. I'm just going to be executing right on the micros. So on the CL second candle of the day, has that accomplished for us our breakout standard or no? Yeah, right. So missing on a volume perspective, so no interest. Okay, good decision here so far. Okay, what would we need to see here to be able to play this as increasing outlier vol or on a breakout to the upside? What would we need to see? So we talked about a breakout above a certain range, right? What would that be? Yeah, so we want above 66.50, right? So 30 more cents. It being increasing volume is not enough, and we're not going to play just the breakout above the opening range high here because it's a 2 out of 3 to the downside. So we need to invalidate yesterday's sellers. Okay, so now we need to see, right, this breakout through that blue line to occur on increasing outlier volume and the candle that looks like 1, 2, or 3. All right, that's previous high a day. Well, I'm just not going to waste my breath talking about price action. That's not interesting, Aj. Yeah, with CL, potentially it could be a little bit sticky until then. But we're expecting it to be sluggish, right? Because it's been sluggish all day, right? Or all month. So my setup here to the upside, Dan, right, is a breakout above the opening range high or a breakout above high of day, right? So I don't have any active setups here at the moment on ES and NQ. On CL, my setup here is a breakout through this line on increasing outlier volume. So we currently have an active setup, but it's going to fail from a confirmation state. I have no reason to trade. So two setup triggers I'm looking for here today, right? Very basic. Breakout through the opening range. So that means the candle starts inside, right? Closes outside. The other break or the other setup, right, is a breakout through high of day or low of day. Those should be very basic to understand. Everyone should understand the concept of that. Okay. Failed on confirmation on both the 3 and the 5. Maybe on the 10 min, we could get a look there. Everything else kind of being sticky and slow. It's a good example here on ES, for example. This is the type of false confirmation I need to avoid that I've probably been trading a little bit too aggressively. Where it's like that rejection inside the range, right? Or kind of like in a no man's land. Everything just give me the one that goes, shows me the one that breaks down. These are the ones that and obviously it's a 3 for 3 here to the upside, so I don't have any bearish scenarios here today on the indexes. Well, if it sells off all day, tough shit. I'm not going to trade it. Okay, what's wrong with this candle? What's wrong with it? Who's got it? I wouldn't call it that shape to be least bullish, right? Because candle body is larger than the top wick of the candle. But if we're saying that our breakout, right, is either through high of day or previous high of day, right? This candle didn't clearly hold above the previous high. So all you do is you pass on that burden of confirmation, right, to a different time frame, reset. Okay, how do we feel now? Better, not so better? What do we think? What's the possible issue we might have with this? Right, just a possible risk reward failure here might be challenging for us to get the risk reward required. We need to be able to execute this trade effectively. Okay, so no entry, right? Wouldn't give us an appropriate risk reward ratio. So now we got to wait for a breakout above the 2R range, right? Or 66.50 to target 66 and beyond. And if I'm going to play a breakdown on CL, now needs to be under 66. So no action here yet. Not in a rush. Yeah, John, I'll be trading MES, NQ, and MCL. It'll be that way until I have 5 days where I follow basically every trading rule. Then I'll go back to trading micro. While we got some time, may as well go over the journal that I made here. So here it is, right? I'll put this in the Discord when it's appropriate to do so. A lot of stuff you can just fill in here, right, and make it your own. So obviously here you put in the time and date, okay, right, June 11th. The results. So this is for each individual trade, right? Green trade, red trade, and then you can put in your P&L. Then you go ticker, right? Direction, long, short, time frame. Which time frame did you trade it on? Here's your entry price, your stop loss price, your exit price, your position sizing, and then total points. And then a little bit of an evaluation, right? So on my entry timing, was I green right away? Did I have minimal drawdown? Was I red right away? Was I never green? Take profit timing, right? Closed at peak, so top ticked it. Closed as P&L was increasing. Missed most of the move, and then panicked, closed. Stop loss location, right? Closed early. So you found a losing trade. You closed it before it became a total max loss. You got faked out, right? So your stop loss got triggered and then the move went in your direction. And then right spot, right, would be on a trade where you finished the trade green and didn't have to have your stop loss tested. The final element there, right, is what was the psychological impact of that day's trading? Was it easy, right? Or of that trade? So was it easy? Did you feel stress? Did you feel no anxiety, right? Medium anxiety, high anxiety, right? On that decision. And then going in and answering why. The goal here then, right, is to, in this section, write down, okay, opening range, breakout setup, on the 3-minute time frame, saw high volume confirmation, yada, 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 right? Whatever information you think you need to be able to review this trade later on. And then the goal, right, is for the entry timing, take profit timing, stop loss location, right? Psychological impact to be blue or better. So we want it to be minimal drawdown, right? We want it to be at the very least closed as our P&L is increasing. We want our stop loss to be in the right location, right? Or closed early. And then we want our psychological impact to be easy, not bad, whatever. For every element here that's a red, so a never green, panic close, right? Fake out, a high psychological impact, whatever it might be, we should be writing down why we think we had that red reaction and what we think we can do, right, to fix that, to avoid the red reaction there in the future. If, right, you fill in this journal consistently, if you actually take your tracking seriously, if you actually do the work that I ask you to do to get better as a trader, then in 20 trades time, right, or in 100 trades time, or in 1,000 trades time, you're going to have a really good sample set of data that you can rely on, learn from, right, and improve. And you're going to start to notice, right, your patterns. How often is my entry green versus red? How often is my take profit green versus red, right? How often is my stop loss X versus Y versus Z? What I'm going to be doing here with this information is putting this into the trading recap channel. I'm going to be doing a Loom video recap of each trade where I'm going to break down these things and break down obviously my trade recap, but then any notes I have for each position. So I'll attach those videos in this page. And then I'll also be attaching a screenshot of my trade. So let's say hypothetically I got in, right? I'll mark out my entry price, my stop loss location, and my take profit, and create that base for myself. Again, right? I am deciding to do this work for me. I am choosing that this is the right thing that I need to do for my trading. I've been doing this for 13 years, right? I've been journaling or effectively journaling my trade for that entirety of that period. I see no reason why I shouldn't continue to be doing that and improving my result. For those of you who are participating in the program and you aren't journaling, you aren't taking that seriously, you aren't tracking, you aren't creating data, fuck you waiting for, right? Why are you afraid of getting better? So the idea here is to force people into doing the work that is going to help them improve. And if you're not going to participate in that element, I'm not going to take any stock into the comments you make or the questions you ask. I simply can't afford to keep wasting time on people that want handouts and aren't interested in participating. So that will be made available to everyone. I will be using it, and you'll be able to see my template on a daily basis. Your choice if you want to use it or not, but I would recommend it. Again, right? I've said this before. I will say this again. The work in trading isn't the trading part, right? The trading is the reward for the work that you do outside of market hours. If you're going to skip those steps or you're not going to do them or you're going to ignore them, good luck. So again, right? We had to set up through that 6650, failed on confirmation. So we reset, try again. Yeah, I'll post it in the trading docs. So all I'm looking for, Mark, right, is what's the first time frame that tells me the same story as my longer term time frame? So I'm just looking for the first one that gives me a signal that matches my longer term plan. Okay, what's missing on this 5-min CL candle? Two things are missing. What are they? And besides the candle shape, what else? So if we're saying it's a setup, right, on a breakout through 66.50, right? We need to close above 66.50. We didn't do that. We closed at 46 or 47 or something. I mean, I'm not going to trade any rejections here today, Aj. I'm not sure if I quite understand your question. So first thing I said when I started the day off, right, is I'm trading two setups here today, right? I'm trading a breakout above the opening range, right, or through the opening range, and I'm trading breakouts above high of day. That's it. So I don't give a shit what price action is doing at 22,000. It has no relevance to me based on what I'm trading here today. I'm looking for a breakout above 22,025, right? A breakout above 60, 56, 50. And I have no bearish thesis because it's a 3 for 3 to the upside. So my bearish plan here is NA. So I'm not looking for any rejection trades. That makes sense? Okay, back to watching for a 66.50 breakout. Now it'd have to be above high of day, right? 52. Call it 53. We have 15-ish minutes, right, until crude oil inventory. So still a little bit of time. Not a tremendous amount, but a little bit. Okay, so what are we missing here still? Yeah, and we need to see this candle close, right? So we got 2.5 minutes to go at the very least. So it breaking through that blue line is called what? Called the setup, right? So we now have an active setup trigger. We're waiting for confirmation. Step one, right? Setup, define your setup. In this situation, it's a breakout through high of day. Now we want to see confirmation that high of day is going to hold. We're going to look for confirmation with a strong candle shape, volume profile, right? Increasing outlier volume. Okay, so 50 seconds to go here. And then if we're looking for a breakout, right, through 66.50, what's our next target? Yeah, right. The next level we have written down on our screen. Okay, how do you feel about that candle? Good, not good, bad, not bad. What do you think? Yeah, totally fine. What happens in 12 minutes? Yeah, inventories data. So is it possible that this is positioning, or do we think that this is a breakout opportunity here? All right, so we've got data in a few minutes, not to guarantee that it's a positioning candle, right? But you could explain that that volume is there in preparation of, right, the data that drops in a few minutes. So now if we were to map out this trade, would be using the pullback technique or the aggressive technique? Which one? Right. And our stop loss would be 66.49. And we watch, right? The thing that would give me a little bit of hesitation here is that why did this candle, right, this new 3-min candle effectively gap down, right? So if this was the candle's close, why did the candle open up cent lower, right? Probably not a very good indication of actually healthy price action or a healthy order book. Because what that gap tells you two things. Either tells you a lack of liquidity, right? So that there is no competition, which would probably be an indication, right, that that big breakout was an algo driven candle or that positioning thesis. Right. So if we're saying that a candle is strong and it has momentum and there's a lot of buyers and a lot of participants right inside that bar, you would expect for it to be smooth and stable price action, right? You wouldn't expect it to be a gap down, an intra-candle gap down, right? Means that there's no one left defending the order book. Make sense? Right. The other thing that it could be is a data misprint, right? So for whatever reason, right, CME, TradingView, whatever data provider that they use to show us things on the screen, they had a misprint, right, which showed that the 5-min candle is closing lower, right, than the previous high. Okay. I'm not going to say that this is outlier volume, though. I can see space underneath that candle, right, or above that white line between that candle. So I'm not going to call that outlier. I need it to be poking its head out. Not poking its head out. It's not obviously outlier. Guys, if you have questions, please in the middle of the day, just use the live stream chat. Don't be sending me direct messages or emails. Congratulations, Nick. So again, right, our analysis of CL pretty much spot on. For watching NQ, this is probably my only thing in play right now. Okay, what's missing here? Yep. So no interest, right? Again, right? Good decision. Outlier vol is a very simple reference point here, Dan. Right. So if you just go into your volume indicator, you tick volume MA. Outlier volume, right, is anything larger than the moving average, right? So you want it to be both increasing and outlier, which means increasing relative to the previous bar and above that white line. No worries, Rebecca. We'll do Monday, Tuesday, Wednesday next week are going to be heavy teach time. Right? We're going to do one day talking about strategy, one day talking about risk management and position sizing, and one day talking about psychology. Missing outlier volume. All right. So volume is increasing, but it's not outlier. It's not above that white line. So no interest on the shorter term time frames, not giving me that. On the 10-min time frame, doesn't appear to be giving me that. I anticipate next week to be really slow. So next week, right, we've got the futures roll happening on Monday. It actually might kick off in earnest tomorrow. Sorry, on Friday. Sorry, today's only Wednesday, right? So it might, it might really kick off on Friday. And then, futures roll day, just generally just once a quarter, right? It just becomes really untradeable, or challenging to trust. Then Tuesday, Wednesday will be fine, normal days, but markets are closed on Thursday for Juneteenth. And then Friday is like a normal trading day, but I'll be taking that day off. Because again, like if you're working at a bank or you're working at a hedge fund, and you have a Thursday holiday, you're requesting time off on the Friday, right? You're gonna go spend your weekend doing something else besides staring at the market. So pair that with the futures roll. Pair that with the consolidation that we kind of have, or that we've been dealing with here for the last little bit. That probably sets up an environment where you get the breakout once all those events are cleared. And then we have like a bit of trending price action going into like the 4th of July week, which again will get pretty slow. So we're going to have, 2 weeks here in the next month or so that are arguably like the 2 slowest weeks of the year. Last year, I was actually looking at my P&L journal yesterday from last year. I ended up taking that entire like 4th of July week off last year to basically back test, refine strategy, improve technique, do things along those lines. It's kind of funny how a year later, it's like you kind of feel like you need another reset at the same time of year. All right. So we had crude oil inventories. No interest here yet. No volume, right? Or increasing volume that's of a tradable standard here. Well, fine, so be it. Happy to sit on hands. And look, the reality, right, of the last, we'll call it 2 weeks, I would say specifically, is I shouldn't say I've probably overcorrected here and traded too much, right? Where every increasing volume candle ended up being a setup. So now, right, you want to like almost like overcorrect here to the opposite way, reset your dopamine, and then the truth is probably somewhere in the middle, or the ideal is probably somewhere in the middle. So next, 5 or so days, I'm really going to force myself to overcorrect. And just like get back to like a reasonable baseline. Yeah, I've not been disappointed with the P&L. I've been disappointed with the roller coaster getting there. And the more that it's like a roller coaster and you get almost like numb to the price action, right? Or numb to the moves, then you get into situations where you want to take off your seatbelt to feel something. And then when you take off your seatbelt, right, and you increase your speed, you're really you really increase. Because this is what trading is though, right? Much as I want the market to be a daily ATM machine for me, it's not always the case, or it's not going to be the reality. It can be over the long term or a very longer picture. And in between those, right, periods, you're going to have times where you're really sharp, times where you're not sharp, times where you're trading well, times where you're not trading well. So you have to force yourself to reset sometimes. I think one thing that I struggle with sometimes uh, with traders is like profitable trading isn't the destination, right? So it's not like oh, I do this and all of a sudden uh once I'm profitable the work stops. It's consistently doing X or Y or Z gets me to be profitable and maintains my profitability. So I think too many traders put their end goal of being profitable, but it's too ambiguous of a objective or too ambiguous of a target that you get kind of lost in the sauce, right? In trying to accomplish it. And so the reality, right, is that you become profitable when you fix the things that cost you money. And the way that you fix the things that cost you money, right, is by being a process based trader or process focused trader. When one deviates away from that, or I don't know if I necessarily deviated away from my process. I think I uh like the distribution of things that got me to be profitable or that helps me remain profitable. I screwed up that distribution where I got too aggressive on that distribution, where I was putting too much stock into yeah, basically being able to pyramid out of a red day. So yes, it's cool to know that your probabilities and your day trading math and all this kind of stuff can bail you out. But relying on that to bail you out instead of a solid foundation sets up scenarios, right, where I can survive drawdown and you can't, which is not fair. So the counter, right, to those that overcorrection, right, is to overcorrect to the other side. You guys are gonna have to see that over the next couple weeks. And it's trading is confusing because, like I said, I think I had what was it, 11 green days in a row here, but it was like honestly 11 ugly days. Like ugly process days. So about resetting. And if I don't get a trade here today, no worries. If I get a trade here today, no worries. Like my objectives for this, up one sec. Basic. All right. So it's just this, right? This is my plan. Achieve these objectives, right? This is the target. These are the rules. And if I accomplish the target, right, while following the rules, then I'll size back, right, to be able to trade minis. You just force yourself to take a little dopamine detox, right? Go to rehab for a couple days, get a fresh perspective, remove some of the psychological pressure, and reset. And if you're in this situation, right, and you're feeling you need a dopamine detox and you need to reset your trading, fine, right? It's not a bad thing. It's your opportunity though, right, to be honest with yourself and to actually evaluate, hey, here are the things that were going well, here are the things that I didn't do well, here's what I need to change the next time, right, we go through a challenging period, which I guarantee is coming, that you're able to survive it better. So if you didn't have the position sizing, right, to be able to survive the last 12 days, right, or you were getting locked out, right, before those moves happened or whatever it is, you need to have an honest reflection with yourself, right, over your position sizing. Because I'm taking, let's say, $500 worth of risk or $1,000 worth of risk, doesn't mean that you have to take $1,000 worth of risk, right, or $500 worth of risk. You need to be selfish there and be sizing your positions to account, right, for how much space you have inside your account. So the base rule I have is for like calculating drawdown, right, is your max daily loss should be no more than 1% of your account. So if you're trading a 50K account, right, your max daily loss should be $500. If you're trading 150K account, right, your max loss should be $1,500. If you've got double the drawdown, right, so let's say that you're above your trailing drawdown threshold, okay, then you can start to push that up to 2%, right, as your max daily loss, but that would be the starting point. And then it's taking your average number of trades, right, that you take per day divided by your max daily loss, and that should be your max loss per trade. So if you take 3 trades a day on average and you're trading with a 50K account, your max loss per trade, right, should be like $175 or something. That makes sense? You bring up your trading panel, right? And if your max loss is going to be $150, you type in stop loss, you change your price, right? Let's say 60.50. And then you want to be losing $500. Well, you can do two things, right? You can change your units to size down, or you can change your entry price, right, to get within striking distance of where you want to be. So you need to be filling in your order window, doing the math, right, of how much your contract moves per tick, and then coming up with that calculation. It should not be difficult or something that you choose not to do. You don't know how much risk you're taking on per trade, or you're exceeding your max loss number, All that's going to do is create anxiety and stress for you inside your decision, and you're not going to make any money, right? You're going to panic close. You're going to react to everything disproportionately. You're going to do whatever. So, good trading psychology is proactive, not reactive. And it's about defining those variables before you enter the trade. So, everything is done working backwards from your stop loss. Yeah, I mean that just sets you up to have too much variance in how much you're losing per trade. So you need both your position sizing and your stop loss location to be working in unison. Consistency is the name of the game. The point, right, of having a consistent max loss is that you can start to notice other patterns in your trading that are going to cost you money, right? Well, the risk reward tool that I'm using is just a custom variant of the Fibonacci tool. How you set that up is shown to you inside the Discord, inside the how to use trading view video inside the start here channel. But it's just a fib tool with the 0, the 1, and the 236. When I draw this out, it doesn't actually execute my trades for me. It just allows me to visualize my profit target, my stop loss, and my appropriate risk reward zone. So then I still have to go into the order window and plug in those details and do that math. I'm not looking for any downside trades here today, Dan, right? You can see my bearish thesis is NA. So I'm not judging the market based off that here today. The trend is to the upside, so I'm not looking at any reversals or counter trend moves. Okay, so again, we're back to having an active setup, right? We need confirmation here. So our setup, right, is a breakout through high of day. Our confirmation is going to be a breakout and hold on increasing outlier volume with a strong candle shape. Seems maybe we could get to that outlier volume. Early reaction, probably indicative of no continuation to the upside, or at least not off of this candle. Yeah, so again, I'm only looking to trade breakouts here today. We need to get a breakout through low of day or through the opening range. Moves off of these highs or reversals, I'm not interested in trading. Because all we've seen, right, in these range bound conditions is that reversals get stuck at the opening range high or at the midpoint and then don't move and then fake us out. No interest. Not a 12K trade. It was like 6.5, maybe. It was like a little bit more. It was like 105 points with 3 NQ contracts. So like 6,300-ish. So now new high a day, right, is 64. This is what we're afraid of on CL, right? Find support off the opening range and then bounce. So just looking for easy breakouts outside of consolidation zones. Base assumption here is consolidation until proven otherwise. Failed again, right? Not outlier volume. Didn't hold above highs. Same thing, right? We got a breakdown through low of day. I don't care about the high volume in the middle. Oh, any questions here, team? Anything you guys want to go over? Not going to stick around and watching paint dry all day. Again, not outlier volume. Not outlier volume. Look, NQ, Dan, has very few reasons from a technical perspective that tell you that bears are in control, right? So I would not trade against the trend and hope that NQ catches to CL. Correlation there is not going to be high. And you shouldn't be interested in trading counter trend. It's a very expensive way to make a living. All right, if we're looking at the daily chart, every time bears have attempted to reclaim control, they lose. And it's basically been just higher, 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 right, since April 22nd. So don't try to fade this just because you're bored. Wait till you actually have a legitimate setup here, confirmed to buy volume, which you've not had on any of your price action bits here today. So don't front run the move. It's too expensive. We've already gone over, right? The plan here for today is bearish NA. So if it's bearish NA, I don't know why you'd want to keep going looking for shorts. Your second most profitable position is sitting on hands. So why not embrace that mindset if you're not getting the action that you want? Being in a rush to make money only makes you lose more. So, any other questions here, team? Not going to place any trades here today by the looks of it, outside of my traditional kill zone. Nothing even really came close, all things considered. Maybe this one, but I would have gone stopped out here anyway, protecting entry at best. Again, don't feel like I missed out on anything here today. Yeah, I mean, truth be told, that wouldn't have been a setup for me there, Ninja, right? No, I did not, Dan. We're already friends. There's some asshole impersonating me. He does like Michael DTR, but with like a period in it and stuff like that. You can tell it's not me because they're not inside the server, right? Yeah, I'm not going to sell you guys some crypto mining bot. That shit's pathetic. All right, guys. Final call for questions here. Final call for questions. Yeah, well done, Rebecca. Yeah, this guy's been he's lost his account a couple times and then just re-signs up with like bullshit variants. I've tried to like sign up for a bit, or sign up for a bunch of different usernames, but got more creativity than me. Yeah, exactly. Yeah. Yeah, I needed it too, Kiki. When your P&L is strong, it's easy to not distinguish the forest from the trees. And P&L's been hiding a lot of things I need to fix. Well, I'm a big believer, Dan, that the more drawdown you have, the easier it is to eventually make money because you have the opportunity to survive more of your mistakes. If you're going to go a larger account, but then scale up your position sizing aggressively, then that advantage evaporates. I'm not going to be shy, right? Not going to hide from it. Trading is my favorite thing in the world, so it's always going to be my focus and improvement. Someone was asking me like why I still trade after 13 years, and the answer is because it's self improvement gamified, right? Like the market for me always shows me the things that I need to fix, and it's my responsibility to take those hints, right, and fix them. When I do, my life gets better. When I don't, it stays the same. And staying the same or worse is just waiting for death. So fundamentally for me, right, that's why I enjoy trading. That's why I'm willing to share these processes because it is self-improvement gamified. Like all things considered, I could probably retire today, just put my money into treasury bills and be fine, or like be able to survive like a basic lifestyle. So as much as it is about the money, it's about that self-improvement more. That's far more sustainable. So it's not about being shy, it's just sometimes change is ugly. So still no crack through low a day. So I'm not going to do anything silly. But yeah, no interest on CL Antonin, right? Until we crack down through low of day or through the opening range. The setups that I'm willing to trade here today are just really basic breakout setups only. So either breakout through high of day or breakout from the opening range. I've got no interest in anything else. All the everything else stuff ends up getting stuck. That's what we've seen in the last little bit. So I'd rather wait for the trend to be in full force and catch the middle of it, right? Instead of trying to squeeze every ounce out of it. I think when you deal with a smaller range market, you maybe start to put more pressure on yourself, right? To catch the top and the bottom or to catch the whole move. Otherwise, it doesn't feel like you're going to make any money. So trying to avoid that like self-imposed pressure. And remember, Dan, it's not the number of contracts, right? That's going to be mentally working. It's being honest with yourself and saying, hey, if I lose more than $200, or if I lose more than $500, or if I lose more than $1,000, I no longer remain rational, and I start to do things that are going to cost me money, right? More money. So you can lose that amount with one contract. You can lose that amount with two. It's understanding the risks that you're taking from a dollar amount need to correlate with your position sizing. Any other questions here, team? Any other questions? At this point, I would wait for a breakout above high of day or target high of day, right, as my profit target. We've seen price action get stuck here at that 2067. I wouldn't want to assume that it's going to not get stuck there until I see it proven otherwise. No, I wouldn't say that at all, John. I don't know what the market is going to do tomorrow. I don't know what the market is going to do on Friday or Monday or Tuesday or Wednesday. I'm just going to trade the setups that show up, right? And if they show up, I'll trade them. If they don't, I'll sit on hands. But while markets are sticky, I'm not just going to force action in. I have the space to be able to survive that, but most people don't. I also have income coming in that supplements my trading, right? Which makes it easier to take those shots as well. But I want to be more deliberate than speculative in choppy markets. So that will just mean sitting out price action that isn't perfect. And then once that one trend day comes or whatever it is a week, be aggressive and make your money there. So yeah, I would think that I probably get some further trades here at some point this week. But I just have to get those breakouts to make sense for me to get some sort of conviction or confidence that we have a change in personality. Until I see that change in personality, base assumption is that I'm going to get chopped about. But yeah, if I felt like I wasn't going to place any trades, I wasn't planning on placing any trades, honestly, I would just go on holiday, right? I'll share that new journal at some point this afternoon. I think the other slightly confusing thing about trading sometimes is I think we're all relatively passionate about it, right? We all love it. We all want to trade all the time, and we all want to be busy, and we all want to make money, and the thrill of the game is really rewarding. But I think because we enjoy it so much, and because it's fun, and because it's all those things, it's also really easy to work yourself into a state of burnout and exhaustion, and like where your mental capital is drained. And I probably say this twice a year. Um, but I probably spend there are probably a couple weeks a year where I spend more time trading than or like I spend time trading when I should be on holiday. And sometimes it syncs up that I go take a day off and that's the day the market moves. And so to a certain extent, probably think that the last 10 days or so have been closer to burnout than they are like peak peak mental capital reserves. That like little market holiday we're getting next week, I think it's coming at a pretty good time. Yeah, fire away, Dan. You mean this line here? So you can find the answer to that in the FAQ section. Step one, use my charts. You click that link and it'll bring up this. So the answer to that there is in the FAQ section. Step one, use my charts. Click that link, follow the instructions. Yep. That's why it's called step one, use my charts, right? That you're able to have your own copy. Any other questions here, team? So the instructions here are very basic. You can see it on my, hopefully on my screen here now. Probably those on YouTube can see the Discord's set up differently. But the instructions are save your own copy to edit, add your own indicators. So in the top right-hand corner here, you're going to see a button that says copy. You have to click that button, and then you can make whatever changes you want to that without it impacting my indicator. So please, your question is answered inside the FAQ. Please reference those resources. Any other questions here, team? All right. Well, if no further questions, I'm going to kill the stream here for the day. Same deal like always, right? If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. Have yourselves a wonderful afternoon, and I'll catch up with a few of you here in our one-on-ones later today. But yeah, have yourselves a great day, team, and we'll talk to you tomorrow.